Back with you, I'm Marlon Bowling, your tour guide to the ag commodities. Hot off the press, I got some brand new information. It is our new ethanol production report for this week. Let's take a look at the trends that we actually had this time around. And as you take a closer look at it, the production went down this past week from just over 1 million barrels per day a week ago to 959,000 this past week. The 4-week average dropped as well. It went down by about 13,000 barrels a day, down to 991,000. And the ethanol stocks stayed exactly the same at 25.1 million, and no imports again this week. So all in all, just a slightly negative report as we fell below 1 million barrels production per day. Now on the grain trade, let's go to the corn board here. Our quotes are provided by bar chart. And it's like basically a carbon copy of what we looked at a half hour ago. May corn still too higher at 653, and December corn down 3 at 556 1/4. And in the soybean market, you have the May contract 3 higher at $15 1/4 cent, and you have November 7 3/4 lower at 1306 1/2. It got as low as 1304 1/4, but that $13 mark did seem to hold here this morning. Meanwhile, as we move over to Chicago wheat on the May contract, we're now 6 higher at 680 per bushel. So that's a 7 cent bounce off of our earlier low. In Kansas City wheat right now, the May contract 4 3/4 higher at 873. And in Minneapolis wheat, the spring wheat market, you have May 1 3/4 higher at 864. Interesting there where the deferreds are stronger than the nearby May contract. As far as cotton goes, we were talking about that a little bit ago. July down 27 points at 82.64. December down 29 at 82.61. So kind of a mixed bag going on in the ag commodity trade when it comes to the crop markets. I want to welcome aboard Todd Bubba Horwitz. He's with BubbaTrading.com, and he's in Las Vegas today. All right, Todd, just kind of a mishmash of activity here in the grains. It seems like they're just kind of maybe biding their time until we get further into planting season or something. What do you think about that thought?
Marlon, I think that the ridiculous reports we continue to get on these government reports are just ridiculous. And you look at the CPI, 1.1%. Are you kidding me? I mean, go to the grocery store. I guess they don't go shopping, but it's holding weight down, and it's giving, I think, the equity markets false hope that they're going to cut interest rates and continue with the hiking and not hike anymore. And I think that's totally backwards. I think that they're going to have to hike, and I think the price of oil is telling us that inflation is far from over. And I think the grains are seeing the effect of the equity stuff right now. And I think once the equities figure out that they made a mistake, and I think that's going to be the case, you'll buy the rumor, sell the news, I think the grains are going to really start to take off. I do think they have seen their lows for at least the next few months anyways.
Isn't it true, Todd, that they have changed their formula for CPI for calculating it over the past few years?
Well, yeah, but the change they refuse to make, which is ridiculous, is that food and energy only counts in 4% of that thing. Now, you know, unless you have a major problem during the year, your biggest expense for a family is food and energy. So it doesn't. The numbers are not logical, Marlon. That is the biggest problem that we see with government numbers. They're not using the correct metrics for the average American household.
So do you think we're going to be stuck in a bit of a sideways pattern during planting season here until we find out if we get all the acres in?
I think we're going to start to take off and go much higher. I think that the equities are going to realize you've got Fed minutes coming out today. You've got another Fed meeting, and I think they're going to find out that they're actually hawkish, which means rates are going higher, and that'll pull money out of equities. And if the missing ingredient in the ag markets is the equity money that's looking for alternatives when they start coming out of equities. Once that happens, I think we start to explode higher.
Todd, if you don't mind, stick around here for a moment, and we'll talk about some livestock trade as well. Our guest is Todd Bubba Horwitz of BubbaTrading.com. We'll be right back. Well, let's dive into our livestock trade. We'll start with our live cattle futures provided by Bar Chart. Well, we closed higher yesterday. We opened higher this morning, and right now it looks like we're still higher. Taking a closer look, we have the June contract now up 37 cents at 164.32. Who's afraid of heights? We have August live cattle 22 higher at 163.47. So the bulls are in charge here in the cattle complex. On the feeder cattle market, look at them go. May up 97 cents at 208.80. You have August up $1.30, and well, for that matter, so is September. It's up $1.30 as well. And for crying out loud, you have October $1.47 higher. Man, are they strong in the feeders. And then on the lean hogs, they're just kind of watching the world go by. You have May down 40 cents at 81.97, but the deferreds beyond that are actually higher. We have June up 40 cents at 88.25 right now, so mixed in the lean hogs. Cattle market flying high here, Todd, on the live cattle. More new contract highs, I believe, today.
Well, we're getting closer. You know, Marlon, the biggest thing in cattle right now is obviously the shortage of beef, because certainly the economy, if we had normal production, we wouldn't have these kind of high prices, but we're getting very close in fat cattle to all-time highs. And, you know, when you look at it, you go, well, how's the average American going to handle their budget with this higher price in crude? And I think the only thing that's keeping cattle higher is the shortage, because we're at about 50% of normal. And I think when you look at the big picture, okay, they're not. I don't think they're going down. I just don't think they have a lot of room to go on the upside, whereas hogs, I think, are going to really start to take off here. I think hogs might have found a bottom here, and if you look out the curve, you see that we get higher as we go into the end of summer, and then, of course, the typical lower prices going into October and December. But I think that hogs are going to have a big summer. I think cattle is going to be steady to slightly higher.
And that spread continues extremely wide between the nearby live cattle and the nearby lean hogs. Wow, it's really something to behold. Thank you, Todd, for the time today. I appreciate you talking with us. Todd Bubba Horowitz of BubbaTrading.com in Las Vegas today.
Right.
Interesting trade. Look at the cattle go.